Hello, Rick Komarek, Certified Financial Planner, and today I'm bringing you an article that I loaded to my blog titled CARES Act Tax and Retirement Plan Updates. Congress's latest coronavirus relief package, the Coronavirus Aid, Relief, and Economic Security, otherwise known as the CARES Act, is the largest economic relief bill in U.S. history and will allocate $2.2 trillion in support to individuals and businesses affected by the pandemic and economic downturn. Here are some of the highlights as they pertain to individuals, their taxes, and their retirement plans. Number one, extended deadline for 2019 IRA contributions. The Treasury has extended the tax return filing deadline to July 15th from April 15th, and also the date for making 2019 IRA and Roth IRA contributions are also extended to that same deadline. So again, the question, does this allow me to make contributions to my IRAs, give me more time for that? And there was some question about that in the beginning, and the answer is yes. According to the IRS, they have answered that on their website that yes, contributions can be made to your IRA for a particular year at any time during the year or by the due date for filing your return for that year. Because the due date for filing federal income tax returns has been postponed to July 15th, the deadline for making contributions to your IRA for 2019 is also extended to July 15th, 2020. Number two, RMDs are waived for 2020. This could be a significant benefit because 2020 RMDs would generally be based on the substantially higher account values at the end of last year. If not for this relief, IRA owners would be forced to withdraw and pay tax on a much higher percentage of their IRA balances. Eliminating the RMD for 2020 can help clients reduce their 2020 tax bill. However, this won't help those who need the funds and must take withdrawals anyways to cover their living expenses. Number three, coronavirus-related distributions from retirement accounts like a 401k, waiver, or an IRA for that matter, waiver of the 10% early distribution penalty on up to 100,000 of 2020 distributions from IRAs and company plans for affected individuals. So this isn't just for everybody. You have to qualify as an affected person. However, the criteria for that are pretty broad. So if you have any questions about that, let me know and I can pass that along. Secondarily to that is extension of the 60-day rollover deadline to 3 years for coronavirus-related distribution. So that's a huge increase on that particular feature of the bill. And thirdly, the 3-year income spread. Generally, distributions from retirement accounts are included as income in the year of distribution. However, the CARES Act allows the income to be spread out over 3 tax years, even though it was all received in 1 year. So those are all the available distributions there. Number four, and finally, there's an increase in 401k loan amounts. Previously, 401k loans were limited to the lesser of $50,000 or 50% of the account balance, and the CARES Act has increased that to $100,000 for qualified individuals. Again, you have to be a qualified individual, like contracting the coronavirus or having a family member that did so. Definitely check into those criteria first before moving forward with any of that. And that particular extension is beginning March 27th for 180 days following that date if a loan is taken from a 401k. If you have any questions about these retirement plan and tax updates, feel free to reach out to me anytime.